Yep, this week will be an interesting one. Lots of news, plenty of news on the calendar. Therefore, likely plenty of volatility. My name is Dima. Thank you very much for watching. Welcome to the Sunday Market Outlook. And as usual, on a Sunday, we're going to have a look at the charts, outline what we've got shortlisted for this week. And let's go through the setups together with the technical analysis. I have got my pairs for this week, the charts for this week on the shortlist. On the right here, you can see with the direction. Let's have a look on the calendar a little bit more in depth before we go into the technicals, as always. So, you know the drill. Let's begin at the beginning. Over here, we have on Monday, nothing to look at. As usual, Monday's mostly a quiet day. Tuesday, then we kick in to the main news. We've got lots of PMI figures around Europe. We have a major news on the pound claimant count, PMI numbers on the pound as well, a speech from the ECB president. That'll be one to watch for. Also on Tuesday, Wednesday, later on, we've got Aussie news. We've got a big one on the CAD rate statement. That is definitely one to watch for. And later, conference, and we've got again another ECB speech on Wednesday. On Thursday, yet more big euro news, and that is definitely one to watch for, rate and monetary policy. On the dollar, then we get into dollar news, GDP figures, unemployment figures, some other minor pairs, and another press conference on the euro. Once again, euro heavy this week. And CAD. And what else we've got? New Zealand, Royal Bank of New Zealand statement, and ending the week with the dollar again. Overall, what can we see? Well, we've got here euro is a big one. Pound is also one. Aussie and CAD. Let's bear that in mind. And it's what seems to be a heavy, full-on news week. It should be interesting. Let's have a look at the charts. Right then, let's go through our charts, beginning with the dollar as always, looking at where we were from last week. And here we are. 2 weeks ago, the candle closed bullish. We expected the week to continue. It did not. It created very choppy price action and the week closed bearish. We are still in a bullish mode. Just because we had one candle pulling back or hesitating doesn't mean we change our bias. So the bias is still to the buy side unless we hit our invalidation point. And you know how we go around here. This is the invalidation point from last week. And as you can see, choppy week. Very confusing. This would have really stopped out many traders. What do we see from here? Well, going to play it as before, as last week, seen as we have not had any significant change here. We are going to still wait for a break of a major structure. Here's a zone to look for as before, and this would still be the scenario. This would be the invalidation point, and really want to see it clear this high. Now, if that does not happen and we clear this invalidation point, then we're going to look to lower prices. Until then, this is just hesitation, and we'll wait for the dollar to indicate its direction. So let's keep that in mind. Still bullish, waiting for confirmation of direction. Okay, now next one I have is the pound. Why have I got the pound? Well, because we are inverse of the dollar, and last week closed indecisive just as the dollar did, which hints at more weakness. You can see 2 weeks ago this big pin bar. What do we do now? Well, we've hit all our targets from previous weeks. Now we just continue and shift. Let's go to the next targets and see where we're heading to next. Well, we've got this low here. Let's just jump to the daily just to get a cleaner picture. Let's look to the left. Look to these previous targets. We have this low here, these reference points, these lows, and then the ultimate low down here. Those are our reference points, and here we've got a high. Therefore, this will be the invalidation high. got a level here that looks interesting. Can now get rid of these. See, there's a bit of a trend line developing here. Now let's go to the lower time frame. And what do we want? Well, we want a better price. And where is the better price? Well, from this high to this low. Here we've got the halfway mark, and above that would be the expensive price. And here we are. That is the area to look for. Therefore, the interesting bit here is this. Let's see if we break through the trend line and reach higher. But overall, the idea would be a retracement, a further expensive price once again to get this really great price, and then head lower down into the next low, which is 1.2, and that is in itself a significant number. What I'm going to do is just mark it out as the 1.2, and that has significance. Let's see if we head back down into there. That is the bias for the pound. All right, let's move on to the next one. Next one on the list is dollar CAD, another one we looked at last week. And with good reason. Well, dollar being bullish. You can see last week closed bullish, confirmed that. The week before we had an inside bar and look to continue, which is what we're having now. Looking on the daily, we have yet to reach these initial targets, so it makes sense to continue with that. Going to the lower time frame. We've got our invalidation point here. We've got our zone that was marked out, which we traded into multiple times, as you can see. And now what we want to wait for, if this is not valid already, we can get rid of this, move this. This has done its job, so we can actually get rid of that. And now this was valid swing point, looking for the next high, which is the one up here, and then the one after that, extreme point up there, are around 1.378. Where next from here? Well, this is where we are. If the opportunity has been missed, if you have not made use of it, then the next opportunity is like so. We've got the break to confirm bullishness on the dollar, coming back to get a price, better price, and then continuing on its merry way. So here's that zone, and we're going to have another one should we break, if we break that level. That is the idea, bullishness, and we've got our invalidation here marked out, so you know where you're going, you know where we're at. If we have the invalidation point taken out, that price point, then we're going to look to the sell side. Now, at the moment we are looking to be buying, so that's that side that we are on, but always going to have to leave room for being wrong, leave room for error, and let the market tell us what it wants to do. That is the dollar CAD. I think it's quite clear. Here's the daily. You can see daily candles are bullish as well, created a new swing and heading higher. That's what it seems like for now. Okay, all these markings we don't need. Here you are, nice and simple, and this is what we've got on the dollar CAD. Okay, let's move on to the next one. Dollar yen is the next one on the list. Another one we've been looking at because consistently bullish, yen is consistently bearish, and we've got more clearer price action to the buy side, leaving these wicks to the downside. More bullish candles. You can see brief pullback, more bullish candles. Last week closed bullish, but it did not pass without its surprises. As you can see, yen leaving really messy, really tricky wicks price action, stopping many people out. We had one here, one on Tuesday, and then of course a few weeks ago this huge one over here. So don't be surprised to see more spikes on the yen. Where do we go from here? Well, we're still bullish, therefore quite clearly going to look at an opportunity to go bullish. Okay, so start again quickly. The week closed bullish, heading into the next target, and then the one after that is the all-time extreme high up here. Where next? Well, looking on the lower time frame, here we are. What we want to see is if this level that we marked up previously, which we are chopping around, does not hold, and the next invalidation will be down here at the obvious low. Let's get rid of these. These have pretty much done their job, so to speak. And if this does not get invalidated and we head higher, if you've not already made use of that opportunity, the next one up, let's mark the 150 significant level, we will have most likely a break, pulling back and continuing to the upside. At least that is the favored scenario. You never know how it's going to play out. It may reverse, and if it does reverse, then this is the price point to watch for if it actually goes below it. If it does, we're going to have to reassess the whole situation. At the moment, what do we see? Choppy dollar yen with still an overall bullish outlook. But word of warning, as before, don't be surprised to see more spikes and more messy price action. If you like this video, leave a comment and click the like button. Do try our best to make these as useful as possible with a clearest breakdown. Right, you're welcome to share your comments and your charts as well. Okay, where do we go from here? Is the weekly on the dollar yen. Let's go to the next chart. We've got Swiss yen. Might not be a surprise. Looked at this last week and no reason to not continue looking at it this week, apart from one word, one caveat is the fact if you zoom in, really zoom out, really zoom out. The caveat is we have cleared the all-time high on the Swiss yen, and now we are created a new high, and the question now becomes, well, where are we going to? In these scenarios, when we don't have a reference point to go to, we don't really know how high the market will go. We're already in an extreme high point. However, there's no sign of a reversal and nothing to say that it should reverse. The only thing we can do is go with the flow until we have another sign that the market wants to do otherwise. It wants to act otherwise. So let's mark out a few points of reference. Here we've got the 170 whole number. So I'm just going to put that in a thick black line. As a reference point, we've got 169. We've got 168 as well. Just put it all right. Okay, so here's our reference point. We've reached the 168 number. The next one up will be 169 and then 170 whole number. Right now, let's go with what we see. And what we see is a bullish week, very, very bullish, really blown through those targets. Looking on the daily, very, very bullish on the daily, very easy to see. We don't no longer need these markings because, well, those are done, 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 done. Right, what's next? Well, what's next is seeing that we're still bullish. We would want to see a continuation. And what does a continuation look like? Well, here's the last swing. So that would act as our invalidation. And here we've got a possible level. Now that we have this level, what we'd want to look for next is pull back into it and then break back through this point to continue higher and into the next significant level. However, bearing in mind that, of course, as I was just saying, we are at a significant high, really all-time high, and therefore it becomes riskier. You know, the further up we go, the higher the price goes, the lower the probability that buying will succeed, because you're getting more and more expensive in price. And you just don't know how much more you can squeeze out of it. Of course, buying down here would be best. This is what we spoke about previous weeks and it would be a great opportunity. Hopefully you made use of them. We talked about buying all of these opportunities. So if you haven't already, do bear in mind that we are at a different stage now and the scenario has shifted. Always looking for probabilities to get an edge, and this edge in this case for this week, Swiss yen, a little bit reduced, even though still yen is weak, Swiss is strong. And therefore, this is why we're still looking at the Swiss yen, carrying it over from last week. All right, so for now, bullish on the Swiss yen. Let's go to the next one on the list. The next one, you may not be surprised to see, is the euro pound. Why the euro pound? Well, we've been bullish on it for a while from this low that we expected. So now we can, let's get rid of these and previous markings. It's no longer needed, and this take profit point was done, and now we're looking at the next one. So the next one will be this high, and this high. Looking to the left, and we're going to follow the plan as we have always done, week to week, bit by bit, step by step. We are just continuing to go with what we see. Bullish, bullish, bullish. That's what we see, and we've got that reversal here. Now, what do we look for? Well, let's go to the lower time frame, and we have this level that we looked at last time. We didn't quite reach into it. We still have our invalidation at this low here. And now, what we want to see is ideally, not that the market will do it, but ideally a better price, some kind of reversal, and continuing to the next levels that we're looking for euro pound to possibly reach. No reason to stop on the euro pound if the trend is continuing, and we've still got highs to the left, as you saw, to your left, charts left, that are yet to be taking out on this side of the chart. So watch out for that. We've got this idea to get a cheaper price. However, if we don't get that and the market moves higher, well, this high is the reference point, and let's see if we get a break through it. And if we do get a break through it, then you know the drill: break, pulling back to get a better price, and then continuing to that, to the next levels, of which we can see here on the lower time frame. You can see more swings, so you've got lower time frame reference points as well. But here we are on the euro pound. Here was the last swing that was made, so we've got our invalidation point quite clear to see. Hopefully you're following along. Pause the video if you're not, mark it up with your charts, see how it lines up, and then go from there. You don't need to, and I say what you say, you shouldn't rely on me, just on my analysis, just because we're doing this video. Remember to make your own decisions and manage your risk as always. Okay, Euro New Zealand, one we looked at last week as well, and for good reason. Look at that, it just ripped higher the whole week, massively, for over 400 pips in the week. And because of that expected bullishness, now this becomes the low. We have a bullish week, continuing to the next bullish price action to the left. Fairly clear to see, isn't it? Lots of highs up here, and we're gonna go for the next obvious one. Okay, where next from here? Well, looking at the candles for the week, we can see we had a brief pullback and then it continued higher and higher. Of course, don't want to be buying at an expensive price, as you keep saying. We want to see a pullback, want to see get a better price, and once we get a better price, then we will engage with it if it gives it to us. Okay, with that, we have our reference point low down here. And what else can we see? We can see that on the lower time frame, we had this being the last obvious swing where we went down into, this was a brief pullback. And what I'm going to do is take this latest swing as the price point. And if I look to the daily, it looks a bit more obvious, this wick. And we have a bit of a gap in the price here. If we go down, this is a place that we didn't quite reach into last week. Maybe we'll do that this week, and let's see if that is the case. Now I'm gonna measure the low to the high, and here we could tell that it falls below the halfway mark, so this is a cheaper price. Really, anything below here is a good price. However, the question is whether it'll reach there. Now I'm gonna look for this kind of scenario, reversal, continuing to the next highs, as you may well tell by how we do things here. If we get it, if we don't, then I'm going to look for a lower price. And where is that? Well, we've got a bit of a level here that has developed. So that is the other option if we get a reaction. Okay, we do want to see a reaction, do want to see it play, and the candles react off those levels, give us nice bullish price action, and you can always trade a retracement and a pullback, whatever you want to call it, unless we actually go higher still and just rip through these levels. If we do, then we will reassess come Tuesday or maybe even Thursday, depending on the news. Remember, economic calendar, we have Euro news, Euro heavy week. We'd also have New Zealand news later in the week. Keeping that in mind, we really want to see that play out in line with what you see on your chart here. So these levels, these zones, whatever you want to call them, really should line up with the news, especially with a news heavy week like this week. All right, that is the Euro New Zealand. Let's move to one that we looked at before, an old favorite, S&P 500. And what do we see? Well, we've got clear bearishness, which was anticipated. We had these levels to be reached, and we reversed off a level that we looked at previously. Closed bearish, very cleanly bearish, very, very heavy here. And as you can see, there's no reason to look for a bullish scenario. Therefore, that is what we're going to do. Look for something bearish. And what do we see? Well, there is a level here. We can now delete these previous markings, the longer necessary. And let's do this. Right. What are we looking for? Well, what we're looking for is continuation bearish to the downside. Here's the low. As we had before, previous weeks, you may have been with me, we were always bearish on the S&P. So we've got a low here, we've got the next low, and the next low after that. These are the obvious lows, clear to see. Now we've got our targets. What do we look for? We're looking for an entry. We have, going to do the same thing as before, our validation point here, which is the swing high. This was the reversal. Now we're going to look for a better price, and we're going to do that like so. Here's our level. Let's see if we get a reversal of that and head down into the next targets, which is 1, 2, and 3. Okay, so that's the idea here on the S&P. Obviously, you want to get as expensive price as possible. We may reach higher into, let me just draw this out. So there's a level here. There's also a little bit of a level here. That is also possible if we actually get it. If price reaches, does not respect, so to speak, inverted commas, this area. Not that it should or it cares, but should it reverse off this area, this will be of importance. And if it doesn't and blows through it, then we'll have this price point to watch for. Okay, as you can see, bearish on S&P, quite clear to see, quite clean, especially from the higher time frame, which is the weekly. We always want to go with the weekly higher time frame. Those are the candles that really give us a bias. This is what we do, and every week that we reassess, this is where we start. If it's not a new month, then we just look at the weekly. If it is a new month, we look at a new monthly candle and piecing it all together, top-down analysis, and then we have our bias, then we have our targets, we know where we're going to, and then we anticipate where we want to engage with the market and what the price action is giving. Okay, I believe this is, yeah, last one on the list for this week. A bit of an unusual one, not one that I personally look at often or want to trade, want to capitalize on, because it is just so messy. But there is a but. Sometimes it just takes more patience, and with Aussie New Zealand it takes particular patience because Aussie New Zealand is a messy one, as you can see from this messy price action. But there is a but, and the but is that this week we have got something that looks very interesting. Why do I say that? Looking on the monthly, top down, once again we had this momentum move, broke higher, all of these structures to the left, as you can already see. If you can't already tell, let me just mark it out. And this was the impulsive move higher. We retraced. We have wicks to the downside. If you want to draw the level, you could draw this level. Wicks to the downside, which suggests that we are going higher. Looking at the weekly, we had another impulsive move here. We had a retracement, and now we are shifting higher. Where are we shifting higher to? Well, as you can already tell, we've got our next obvious price points, the next highs, the next high, and the next high to the left here. What does that mean? Well, it means that this could be the low. We had a very, very, very bullish week, momentum to the upside. And if you could tell from previous weeks, what you will see is that the bullish momentum is stronger than the bearish one. Bullish here, bullish right here, very, very strong. And then it kind of hesitated to the downside. So after the retracement was done, we are now looking to be more bullish. And of course, this is on over a very, very long period of time. The retracement ended end of last year, and now we are end of this year. So this stuff sometimes takes time, especially with a slow and messy one like Aussie New Zealand. Okay, no more rambling on. Let's see where we are looking at. Well, we're going to draw our zones and look for better prices from the low to the high. We can see it falls within the cheap price, and that is our interest point. Interesting area, some kind of reaction, and then continue to the upside. That is the bias for this week on Aussie New Zealand. Really want to see a better price, a cheaper price, and hopefully we will get that. If not, then we will have to reassess, and if we go higher, then we'll look to reassess what the market is doing throughout the week, as we usually do. Of course, as always, we've got our invalidation point. So if we break through here, we're no longer bullish on Aussie New Zealand. Okay. Yep, remembering we've got both Aussie news this week and New Zealand news this week. It's going to be an interesting one. It should be an interesting one, but let's see. You never know. Never know. Never know with the market. We've got to always have a plan B, and we manage our risk. We've got our invalidation points, and we're good to go. Right, then we're back to the dollar, and here we are on the dollar. As you can see, yep, that is the market outlook for this week. Thank you very much for watching, guys. Hopefully that has been useful for you. If you haven't quite understood it or haven't quite caught it, go back over it. If you have any questions, leave a comment and we will get to you and clarify. Okay, here are the charts one more time in case you need that. Pound dollar, we've got bearish bias. Dollar CAD, we've got bullish bias. After retracement, as always, dollar yen bullish as well, even though it's slow. Swiss yen also bullish, being careful of that expensive price. Euro pound, very clearly bullish, continuing from previous weeks. Euro New Zealand bullish as well. And S&P bearish with that big candle. It is just weaker and getting weaker and weaker by the week, isn't it? You can see that bearishness here, brief pullback, bearish again, brief pullback, bearish again. It's just heavy, 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 very heavy. Looks like we have a major crash, if you want to call it, enveloping here on the S&P. So let's see how it goes. And Aussie New Zealand bullish. Okay. That's it for this week. Thank you very much for joining me once again, and I will see you on Tuesday as always. with another video, another update, and Thursday too, of course. All right, watch out for the news, manage your risk, and I will see you on the next video. Bye for now, guys.